Welcome to the Planet MicroCap Showcase Virtual 2022. I'm your host, Robert Kraft, and thank you for joining us. Now presenting at our event is Gary Atkinson. He is the CEO at the Singing Machine Company. It's a publicly traded company. The symbol is MICS on NASDAQ. And with that, Gary, take it away.
Perfect. Thank you, Robert. Hi, good morning, everybody. My name is Gary Atkinson. I'm the CEO of the Singing Machine Company. I want to thank everybody this morning for taking some time to learn a little bit more about Singing Machine and get a sneak peek as to where we're moving in the future. So with that being said, I'm going to dive right in here. Now, for those of you who are not familiar with Singing Machine or don't know who we are the worldwide leader in the home karaoke category. So we don't manufacture the big karaoke machines for the bars and clubs. We really focus our efforts on the home consumer market. And last year, we sold over 1 million karaoke devices worldwide, which generated approximately $52 million in revenue. So one of the things right off the bat here that separates us from a lot of micro-cap companies that you might see at some of these investor conferences is that we actually have real revenue. So we have a long-standing history of very stable revenue and also a track record of profitability. So those are two main things here that I want to point out right at the top that separates us from some of the other micro-cap companies. Now, we, in terms of our product lineup, so we segment our lineup into multiple different categories. We have a kids line of products. We also have our regular home and entertainment category of products. So typically starting at price points on the kids line from $20 up to about $50. And then on our home line, anywhere from $50 all the way upwards of $300. One of the big things that I'll talk about later is where we sell our products to. So we have created very extensive pipelines into all of the major big box retailers in North America. So you can find our products at Amazon, Costco, Sam's Club, Target, Walmart, etc. And we'll talk more about that. And as Robert mentioned, right at the top, we just recently uplisted to the NASDAQ capital markets this last summer, and we're now trading under the new ticker MICS, M-I-C-S. Now, what are some of the reasons why somebody might want to invest in Singing Machine? So I'll hit some of the highlights here. Last May, we made a pretty big announcement where we signed a new distribution deal with Walmart Consumer Electronics that's put us now in 3,600 Walmart consumer electronics departments around the country. And this is a really big deal for us, a big announcement. And I remember at the time, a lot of investors or shareholders reached out and they said, well, aren't you guys already in Walmart? Why is this such a big deal? And the answer to that is yes. So prior to this year, we were available in the Walmart toy department. So Walmart toys carried our product line, but really more youth-oriented products, so anywhere from $49 and below. Whereas here, we're going to continue to remain in the toy department, but this new consumer electronics department is going to be above and beyond toys. And the reason why it's so big and the reason why I like this so much is that it gives us the freedom to move up in price points. So the consumer electronics department will carry items $50 and beyond. Right now, they're carrying line from $50 all the way up to $150. But certainly with higher price points generates more revenue, also gives us the freedom to introduce some new technology offerings into those stores, which we'll talk about a little later. But it's a dedicated 4-foot section in Walmart Consumer Electronics, which is one of the most the most dominant consumer electronics retailers really in the world. The next thing I want to highlight is our ability to generate recurring revenue. So this is sort of the razor blade business concept. And one of the analogies I like to use is if you were in the market to buy a PlayStation or an Xbox video game console, you certainly wouldn't buy those and then not go and get games for that video game console. And I think the same analogy holds true in karaoke. You're not going to go buy a new karaoke machine and not want the latest and greatest hits in terms of content for that karaoke machine. And we've built out a pretty nice recurring revenue platform here with our subscription-based app approach, and I have extensive slides on that, so we'll cover that later. Next thing I want to highlight is just the fact that we're the #1 brand in our space. We've been in business for over 40 years. We are the dominant brand, the most trusted brand, not only by retailers, but also by consumers. And I think the other key point to that is that karaoke is not one of those categories that's just hot one year and then off the next year. I think we've proven over our years that karaoke really is an evergreen category, year in, year out. It has opportunities to be successful. And then finally, we have a strong balance sheet. So we recently just announced a refinancing of our line of credit. We're now with Fifth Third Bank. We have a $15 million line of credit, which comes in at significantly lower interest rates than our previous lending relationship. So we actually, we believe that we can save up to $750,000 a year just in interest expense with this new line of credit. And the reason this is important is because we're not being forced to have to go to the markets every so often to raise money to fund working capital. We have the debt structure in place now to fund working capital. So I think that's important to point out. Now here, this is really where I think the company's strength really comes into focus. So we've built out key pipelines with every single major big box retailer. So I mentioned already Walmart. We're in 3,600 stores nationwide in the toy department and also in the consumer electronics department. We're also in Target, 1,800 stores. We're in every single Costco around the country, and Costco's carrying our big flagship karaoke item for this year. We're also in Sam's Club. So Sam's Club is carrying 3 karaoke items, which are all going on promotion starting this week. We're also in BJ's. So in total, we're available in over 25,000 stores nationwide, representing over 75,000 linear feet of shelf space. And at many of these retailers, we are the captain of the category, which means we are the exclusive year-round karaoke supplier. So if a retailer is going to stock karaoke, they are going to stock Singing Machine. Here, I want to talk a little bit about some of our international distribution efforts. So obviously, we're very strong here in North America, but the thing that I really like about the karaoke category is that it really isn't just limited to North America. It's one of those categories that really spans across multiple age ranges, cultures, nationalities, countries, religions. People around the world really love to sing and they love karaoke. And so we've just this year announced a lot of new partnerships and distribution deals. So we're selling very well in the UK. We have a strong presence there now. We're looking to expand into Europe and the Nordic countries. We're also heavily distributed in Australia, which is performing very well, growing. I think last year grew almost 100% year over year in Australia. And then obviously the Asian communities and countries, they love karaoke. So we understand that's a huge opportunity of growth for the company as we move forward. So this slide, I kind of want to talk a little bit about our different product lineup, and then this will dovetail into the recurring revenue side. But right now, we basically break our product lineup into 4 different categories. So we have our Singing Machine Kids line, which is youth-oriented products for kids that starts at typically $19.99. We just launched a new line of plush toys that you can see down below that are sing-along. Those are on Amazon, performing very, very well right now. And they're fun, they're inexpensive, right out of the box entertainment. Then it steps up to our traditional line of products. These are sort of what you would think of when you close your eyes and think about what a karaoke machine looks like. That's what these products are. Majority of our retail presence is on the traditional karaoke line. So they're fun, they represent a lot of value, but they're also very low tech. So, and actually a lot of these machines, believe it or not, still rely on a physical CD to get your karaoke music. And so that's why we've really been spending a few years developing these next 2 product categories. because we believe that karaoke should be digital, and that's where we believe people want to get their music from. So we launched just this year, actually starting with Walmart Electronics, and also this year with Sam's Club. We've launched a new line of what we call SingCast casting karaoke devices. And what this allows you to do is you can basically use our app on the iOS or Android devices, and you can wirelessly cast your karaoke videos to your big screen TV using these casting products. And these are great because it really, it's technology that embraces the app. It gets more of our customers familiar with and using the app, and I'll talk more about why that's important. But we are seeing some strong conversion from people that buy the casting product, who then later download the app and then become paying subscribers. And then finally, the sort of flagship in our lineup is our new Wi-Fi streaming pedestal. This is at Costco this year, I believe, actually starting promotion today, possibly. But this item has Wi-Fi built into it. It's a fully integrated hardware and music content offering. And this item connects directly into our karaoke music library of over 70,000 karaoke songs. And it's available on a subscription basis. And we'll talk a little bit more about that here in the next slide. So I touched on this in the early introduction. So this is our recurring revenue razor blade model. And so last year we successfully completed a $10 million private placement. And one of the lead investors in that round was a company called the Stingray Group. And Stingray is a large leading music content, media, and technology company. And we've partnered with Stingray to power that karaoke catalog. And so through Stingray's partnership and through their help, we've launched apps available on the iOS and also on the Android platform, which offers over 70,000 of the latest and greatest karaoke hits available for streaming. So think of this almost as like a Netflix type model, where you have access to the entire catalog. And we offer either a monthly subscription package for approximately $15, and then we also have quarterly and annual packages as well to unlock the full 70,000 song catalog. And the reason why this is really important for the company is obviously the revenue from music subscriptions is great, but these come with significantly higher margin than what our typical hardware margins are. So EBITDA margins from music content sales are typically anywhere from 85 to 90%. There's no inventory to carry. And from a pure financial perspective, it's about 3 times more profitable than the sale of a hardware device. So we see this as a big opportunity here. If we can turn on this recurring revenue model and scale it, this has the ability to be a very meaningful impact on our bottom line. And so I guess further to that point, so as we look at our product lineup moving into the future, I mentioned at the beginning, we sell over 1 million karaoke devices every year. And what we want to do is we want to start focusing more and more of that product lineup into the streaming category and our casting category, because those two product categories connect directly to our music catalog. And the reason that's important and what we've seen in sales so far is that whenever we have a tighter relationship between our karaoke machines and the music content, the more likely it is for that customer to later adopt and become a subscriber on the app. And we've just seen that particularly on the streaming model, where the music is built directly into the machine. Those customers that subscribe, they end up staying on longer. They're more satisfied with the product. They typically use the machine more often than any other machine. And it's because we've made the user experience much more simple than some of the other products. So this is an area where we want to continue to develop as we move forward into the future. Now, talk a little bit about some of the growth catalysts for the company. So I mentioned the recurring subscription revenue model. That's something that we're actively continuing to build out. But the other thing we're also thinking about is, where are people doing karaoke? Where are people singing? And obviously our core business is focused around the idea that people are doing karaoke at home, right? So for those customers that are singing at home and looking for home machines, we have a full assortment of products to meet those needs. But that's only one vertical. There's many other places where people are singing and doing karaoke. The next place would be the car. There's a lot of people that are doing karaoke or singing in the car. We've sort of proven that out with our carpool karaoke microphone that we launched a few years ago. It's a licensed product in partnership with the Late Late Show with James Corden, who started carpool karaoke. But we're seeing that as a very fast growing segment, and particularly since Tesla had announced a little while back that they were also including karaoke in the Tesla vehicles. We started to see that has paved the way for much larger, bigger opportunities that we'll be announcing, I think, fairly soon. We should have some announcements and press releases regarding the karaoke automotive space. But then we also look at, where else are people singing? And I think the last area is people are singing in traditional brick and mortar karaoke bars and clubs. And that's an area that's of a lot of interest to us. We've looked at that category very closely. It is an area that is interesting to us in that it is really ripe for disruption. It has not changed in over 40 years, the general concept. And we see opportunities to really add value and grow the experience behind sort of a face-to-face, in-person karaoke venue business concept. So that's something that we're investigating. And again, we will be making some announcements in that space here coming up fairly soon as well. Now, just quickly touch on the management team here in place. So between myself and my management team, we have over 50 years of experience in the karaoke category. We have long-standing relationships with almost all major retailers. We have relationships with many manufacturing partners overseas. And we've also been successful in attracting a lot of senior leaders from the overall toy industry that have joined our board. We've also attracted people from the media and music content space to come aboard. So we really have built, I think, a very strong team that's capable of executing on a lot of these growth opportunities that I just outlined. And then here, financials. So as I mentioned at the beginning, we are different from a lot of microcaps in that we have real revenue. So you see, we've been pretty consistent in posting upwards of 50. Last year was 52 million in gross sales. And we have a history of profitability. So 9 out of the last 10 fiscal years, we've been successful in showing a profit. So I wanted to point that out here as well. Cap table. So this is an area where I've been getting a lot of questions. So we have a very pristine, very tight, low float, very tight cap table. So as of November 28th, we have approximately 3.1 million shares outstanding. We do have warrants that convert to common. There's another 800,000 or so of those warrants. But all told, fully diluted, we have a cap table of about 4 million shares outstanding. So that's very tight. And my estimate is that non-affiliated public float, so essentially sort of true public float, is probably somewhere in the neighborhood of 750 to 800,000 shares that are truly in the public float. And here, finally, just some key takeaways to leave everybody with. So a lot of these things that I've talked about over the last 20 minutes or so, these are not things that are part of the roadmap that we need to build out. I'm not here looking to raise money to execute on a lot of the things that I talked about. I mean, we've already done and built pretty much everything that I mentioned. So I talked about our key retail pipelines and distribution that we've built out. That's all done. You know, we're in with every single major retailer and e-tailer. We've already developed and cultivated key strategic partnerships in the space. So we do have the strategic investor in the Stingray Group to support us from a music content perspective. We also have, for over 40 years, the dominant Singing Machine brand in the home karaoke category. And we believe that brand can be more than just a consumer product brand. We see opportunities to diversify. There's many verticals within the karaoke category that we're not in, that we are focusing on, that we are looking at, that I think could be big growth drivers as we move forward. And finally, we have a veteran leadership team that can execute on a lot of these things. We're experienced in the space. We have the key connections and relationships with a lot of these key partners, and we look forward to continuing that into the future. So with that being said, I appreciate everybody's time today. I look forward, if anybody has any questions, feel free to reach out to us. And again, thank you everybody for taking the time to learn about Singing Machine.
So Gary, thank you again for your presentation here today. Really do appreciate it. Had a few questions for you that I wanted to ask. First thing, you talked a lot about the sales for the music subscription and your plans to wanting to scale that. So can you give us a quick overview of where you're at in sales, firstly on that subscription side, and then what are the plans to scale that side of the business?
Yeah, that's a great question, Robert. I appreciate it. So we typically do on the music subscription side anywhere around gross sales of about 1.5 million. But we obviously think that category should be much bigger. And the ways that we're looking to grow that is, I think it's really a function of the machine integration, right? So a lot of those machines that we sold last year, they were still the sort of low tech traditional karaoke machines that really don't connect well to the music services. And so I think part of that is just we need to sell more devices that are more high tech that can connect seamlessly with the music service. So like for instance, at Costco, we have our Wi-Fi flagship product that's being distributed at Costco this year. They're going to carry close to 30,000 units for this holiday season. So that's going to help drive music subscription sales. And then the other big area is the new casting machines. That's brand new. That just started this year. That was not in the market last year. And we've been successful in getting that into the Walmart consumer electronics department. And we're also in Sam's Club. So those machines will be incremental, and that's going to be driving more customers to the app who are then going to become paying subscribers. And one other thing I should have mentioned is we do give away 1 month free trial. So if you buy one of these devices, we do invite you to use the app for 1 month to get access to all the songs. And then after that, we encourage customers to subscribe to access the full catalog.
Absolutely. What else is the company doing in terms of marketing? I mean, I remember, you guys were the official brand or for carpool karaoke with the late show with James Corden. So, now that show's kind of winding down, I guess you say, right? I think they're stopping next year.
Yeah, I think his contract's only got 1 more year left on his contract, or maybe less than that now.
Yeah, something like that. So what's the next stage for your marketing strategy? Obviously, you're in all these stores, but is there an online presence as well?
Yeah, there is. We just actually recently completely redeveloped our website to be more of an e-commerce platform. So if you go to singingmachine.com, that's now our new website. I think it's a lot more consumer friendly. We keep it more focused around our products, and then that's been doing well. I think the other thing is we've really seen. So one of the things that we saw from carpool karaoke is social media. I've never really been a huge believer in the power of like social media and influencers, but we saw it firsthand when we launched carpool karaoke. It went bananas, and it wasn't anything we did. It was TikTok. It was literally a bunch of kids who found carpool karaoke microphone on TikTok, and they were using it. So we developed that carpool karaoke microphone as like almost, we designed it as something to use to sing in the car. And these kids, they decided they were going to use it for like really fun, outlandish things. Like, for instance, there was some videos of kids going through like a Starbucks drive-through, and they would sing their order through the microphone into to the drive-through window. And then when somebody would come out and hand them their food, they would try to get that person to start singing on the mic, and they would film the whole thing. And it was just like crazy, funny, different things that really went viral. And we ended up getting, I think it was over, I want to say 400 to 500 million views on TikTok with Carpool Mic. And it had an immediate impact on sales, like almost right away. And so we started really, I've become a true believer now in social media and the power of influencers. And that's an area where we've been investing a lot more thought and energy into creating that viral buzz that we had. How do we create that now for some of our other products? And so we have a TikTok page now that we never used to have. We are working with a lot of influencers. And so I see that as a key part of our strategy for marketing moving forward.
Very good. All right. Well, final question for you here today, and I'm asking this to every company that's presenting. We're in tough markets right now. And so what are some of the measures that the company is doing in order to mitigate some of the macroeconomic pressures that are affecting most microcap companies across the board?
Yeah, great question. I mean, I think particularly with what's going on at retail these days, I think retailers are becoming more and more risk adverse with the way that the economy is trending and the way that consumers are spending their money. So some of the things that we've been working on, and it kind of perfectly dovetails in with your marketing question, is we believe we need to be more of a direct to consumer brand. So we've been working on, like I said, about expanding the messaging through social media, through e-commerce platforms, trying to create and own the customer on a one-to-one basis, as opposed to having them find us through retail. I think there's obviously a large segment of the population that doesn't shop at retail. They do probably almost exclusively all of their shopping online. And that's where we're trying to win the buy box. That's where we're investing heavily into Amazon so that our products are coming up at the top of the search. We're spending more money than we ever have on things like Google paid search. And then obviously just trying to get as many views as we can through TikTok and Instagram and Facebook. That's where I think a lot of customers are shopping, and that's where we're trying to win them over.
Very good. All right. Well, Gary, we're there. Thank you so much for your presentation today. I really appreciate you taking the time to answer a few questions. Everybody watching and listening, thank you as well. And enjoy the rest of your conference. Gary, thanks, man.
Thank you, Robert. It's been a pleasure being here. Thanks again.